All right. Hello. Good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today I am making this video even though I got some dental work done and my teeth really hurt. But you know what? I really appreciate you guys sticking through that terrible intro because today I want to talk about my investing account. I want to talk about some Yieldmax ETFs. I want to talk about the market in general. If you are a high yield dividend investor who maybe potentially invests in YMAX or individual Yieldmax ETFs, or you simply look over the overall market, I want to tell you guys some interesting things about the market, some interesting foreign markets as well, because all markets are going down. Even the Sensex Bombay Stock Exchange in India is going down at the same time, which I also have their stock chart up here. Coincidentally enough, it tracks very well with the S&P 500 over the 5-year time frame. But what we're talking about in this video is I want to talk about some major stocks and, of course, Yieldmax ETFs, and as well touch on Bitcoin too. There's so many things. This is going to be a jam-packed video to show you guys how the market is trending downwards and we are potentially in for more downside. Although things look to potentially have had a little bit of a bounce back, I don't necessarily see this being a full uptrend. I'm going to make this as concise and good as possible. I really appreciate you guys sticking with me. We're up to 7,608 subscribers, 277 subscribers in the past 28 days. As soon as we got that out of the way, let's get into this video. So I want to first share off some orders. I want to tell you what I'm doing at this current time point. So I took a lot of cash and I journaled it into DLR.to. I took about 4,500 Canadian dollars, which is roughly about 4,500 American dollars, which is roughly 3,000 American dollars. So you could see that right there. And what I've done is I've basically used that as my cash position. Right now, I'm actually in the negative about $2.3 thousand in USD. So I am using margin. And what I did was I bought about 150 shares here of SQY. I also purchased 65 more shares of YMAX on margin. And then I reinvested my dividends in my cash account, 12 shares of YMAX there. So I am going about $2,500 in terms of US dollars into margin debt. I'm saying in terms too much. In margin debt. And the reason being is because there's opportunities presenting themselves within the market. My margin account can go much more into a margin debt if I really wanted to. I have about almost $20,000 in terms of buying power, and I'm not just using this buying power, for example, and then not thinking about the downside. What I've done is I've purchased DLR.to and journaled the shares over to DLR.u.to, and that's giving me about $3,000, fully covering my margin cash, as you can see right here, fully covering that. So I'm not necessarily playing margin with the biggest risk, but if I do see opportunities, I am going to take advantage, put that cash in, and take out more margin. Why am I seeing opportunities? Of course, the market's going down, but the main reason being is because you have, in my opinion, great ETFs like SPY, like SPXL, which is 3 times bull on the S&P 500. It's been very volatile over the last little while and offering up some pretty good price points. But the main reason what I see is companies like Block. Companies, for example, I'm not sure about Tesla, but Block, Apple, all companies are reporting, even it's AI, C3P AI or something like that. A lot of companies are reporting fantastic earnings, or at least hitting their quotas. They're reporting good earnings, but their stock prices are trending down. And what you'll notice here is there's a lot of bear sentiment in the market. All expectations for analysts are going lower. Even when we look at Apple over the past little while, we had expectations when things were at all-time highs of Apple going from $300 to $325. That was the analyst expectation. But as the market has been trending down recently, we're seeing expectations going from 210 to 200. We're seeing as well price action. Everyone's thinking it's going to be lower. Even when the price rises here, you see people are downgrading even amazing stocks such as Apple. And we could debate about why they're downgrading a lot of these stocks and ETFs, but I think there's a lot going on within the US government in terms of potential job layoffs as well. I think that people might have been in this rally mindset for too long, and they're starting to think a bit more bearish about the market, because we've seen a steady kind of growth within the market over the past, we'll say, a year to 2 years as we zoom out to the 5-year calendar, and we're starting to kind of see a bit of a slowdown. And of course, it's nothing crazy, like we see dips within the market, but the fact that the market has hit this price point of about $610 on SPY and repeatedly gone to the downside in this marker, now going down the fastest it's ever really gone, all the way down to about 580. I do think there's potentially more downside in store, which could mean more opportunities for companies that are well positioned. When I look at a company like Block, for example, which is one that I bought on margin about $1,500 more. The reason why I bought so much more of it is because it's a positive cash flow company. Earnings per share 4.56. They actually, I'm pretty sure Block was the the stock that beat their own analyst expectations and yet still fell about 15%. To me, that screams opportunity. They are in line with what they present to do, and they have great outlooks for the future. Why am I not buying, for example, either Block or the Yieldmax ETF at a great price to potentially earn higher dividends and capital appreciation? That's what I did with Babo, for example. And now Babo is paying me $1.91 on 294 shares, and I'm currently up on this position about 16%. I was up about 30% the other day. Of course, the dividend eats into that, but Babo is one that I was buying way at lows, and my current average cost per share is a lot lower than the average share price, and this is also coming with this almost $1,000 dividend that my shares are going to pay out. That was the whole purpose of buying Babo. Babo, I invested about $5,000 USD into Babo. It's going to pay me about $700 USD for this month alone, and I am up on that position. That's exactly what we want to achieve with the Yieldmax ETF, and that's exactly what I see in SQY. That's why I'm buying it. Of course, only my opinion, but there's other Yieldmax ETFs which have taken hits, such as MSTY over the past month, down 25%. I trigger this to the price of Bitcoin. Bitcoin is falling at the current moment. I do think it potentially could fall further. Bitcoin in the past has been known to fall and rise pretty fast. You see here going from about 13K up to 75, down to 41, up to 75, down to 20, and then up and down. I do think that Bitcoin could potentially settle about $80,000, but that is still about a 50% drop to go. So, keeping in mind, there could be opportunities presented within themselves. What I'm currently doing is I'm looking for great companies which are showing positive earnings and positive expected outlooks on the future. For example, Tesla, the underlying business has not changed, but it is a heavily moving stock. And when you have heavily moving stocks that are shorted like Tesla is, they present good opportunities for the long term. So with this video, this kind of shows my kind of ideas and sentiment around the market. Could potentially go lower in the future. I'm not exactly sure, but I'm buying with the intention that it could go lower, but I'm taking advantage of some of the little opportunities that are presented with themselves today. So that does sound good. We're currently up to 7,608 subscribers. Thank you for sticking around to the end of this video. I hope you guys enjoyed, and I hope to see you guys in the next video.